With back and forth from the Trump administration on tariff plans, some home builders and buyers are raising concerns about the long-term impact on the housing industry. According to the National Association of Home Builders, $204 billion worth of goods were used in the construction of new homes in 2024. $14 billion worth of those goods were imported from foreign countries, meaning roughly 7% of all goods used in new home construction last year came from outside the U.S. Earlier, I spoke with Jim Tobin, the president and CEO of the National Association of Home Builders, to get his perspective. Which home building materials are typically imported and from where?
So our largest imports come from three countries primarily: China, Canada, and Mexico, in order of importance in that order. But from China, we're talking about lighting fixtures, some small hand tools and power tools, as well as major appliances. From Canada, primarily, we get a lot of our aluminum as well as our lumber. 30% of the lumber we use in this country is imported, and about 70% of that, almost 80% of that, actually comes from Canada. And then Mexico, some appliances as well, but gypsum primarily, which is the main component in wallboard, or sheetrock, if you will, that makes up the interiors of housing. So those three countries are really responsible for a lot of our building materials here in the United States.
So I'm not familiar with whether lumber is covered under the USMCA, but I am familiar with the fact that tariffs on Chinese imports are now going to be 125% effective immediately. So you mentioned lighting, hand tools from China. You mentioned other imports from Canada and Mexico, which aren't completely unscathed from tariffs. We are also seeing tariffs on imported aluminum and steel. So what does this mean for home builders and for how they are going to deal with those added costs?
Well, at first, we were glad to see the 90-day pause on those broader tariffs, but we did see that increase on Chinese tariffs, and with China being the largest supplier of building materials for us, there is going to be an impact. So we're expecting to see prices rise for those materials that come from China, and even those that may come from other countries that still have that base 10% tariff on it. So we're anticipating higher material prices, which are either going to be absorbed by the builder, or more likely they're going to be passed along to the consumer in the form of higher prices, whether they're buying appliances or in the cost of that home that our members are going to build for them.
What does that mean? Have you crunched the numbers yet on how much home buyers could expect to shell out? How much extra?
We've done some survey work, and by and large, our members are saying it's a little bit north of $9,000 to the cost of a median-priced new home. Of course, that may go down as now the tariffs are a little bit more relaxed, and of course, it may go up depending on how much materials are imported from China. But we are anticipating something, somewhere between $7,500 to $10,000 could be in the cards for new homes in this country.
Roughly 15% of our mortgage-backed securities are owned by foreign countries, according to Government National Mortgage Association, or Ginnie Mae, including China. So if China wanted to retaliate in other ways besides tariffs, they could decide to sell some of that debt, right? I mean, that could cause mortgage rates to rise. Are you concerned about that possibility?
We're watching the bond markets very, very closely. We saw that spike last night, which we're going to, could foretell mortgage rates north of 7%. We saw that calm down today, of course, after the president's announcement. The bond market continued to react to that. We are very closely aligned with the 10-year Treasury, and especially as we get into the spring buying and building season, rates are going to be incredibly important, not only to home buyers, but builders as well. So we want to make sure that we don't get into a situation where China is selling our debt and we see higher interest rates, because that's going to translate into higher costs as well.
Let's talk lumber really quickly in the 30 seconds I still have you. President Trump signed an executive order calling for a 25% increase in timber production from federal lands. Will that be helpful to your industry?
Enormously helpful. So grateful for the president for wanting to increase our domestic production. Like I said earlier, 30% of our lumber comes from across our borders. If we can bring more of that production to those rural areas in the country, restart those sawmills, and produce more of our lumber here, we will reduce our need for foreign lumber, and that's a good thing in my mind.
Jim Tobin, thank you for your time. We asked our CBS News community journalists across the country to find out what people want to know about tariffs. Lana Zach is in Cedar Rapids, Iowa. Karen Hua is in Houston. Ian Lee is in Kansas City. Nicole Valdez is in Nashville, and Katie Weiss is in New Orleans, talking to you folks out there about your questions. And here is some of what they heard.
This is obviously going to be a big shift in our economy, and I'd ask, what should I avoid and what should we be investing in?
They're going to hurt more American people than help. Then what are we going to do about it? What can we tangibly do to improve or put pressure on our leadership to not do them?
What's the advice for people who are not in the immediate range for retiring, but are concerned about stock markets plummeting? Should we invest in, I don't know, bonds or any other things that you can if you have some liquidity?
I was just wondering if tariffs have always existed or if they have just started happening more now that Trump has introduced more policies.
For the average American, what's the best thing to do with their money, right? 401ks probably don't look like the best idea right now. What is the other option?
Mattress. No, I'm just kidding. All right. What do you guys want to talk about first? What do you want to tackle?
I'm going to let you go first.
I think what was really interesting, just to comment about that, is that everyone was talking about the stock market. And we talk about this all the time. The stock market doesn't mean the economy, right? Because actually the economic data right now is good. We're going to get some more tomorrow with inflation. But, that is part of what is influencing consumer sentiment, which I thought was interesting. The question that stood out with me is just, it's so important with context. Have tariffs always existed? And yes, this has been around for centuries. This is not a new Trump policy. We saw this under the first Trump administration. Biden kept those tariffs on, added new ones. You can go back to different points in history and see this. Countries want to protect their domestic industries, apply economic pressure. It's not new. I just don't think we've seen it done this big.
Right, exactly, exactly right. In terms of when you think about investing, I always have this very simplistic way of thinking about how you build your blocks of your investing. And you start and you say, I cover my big three. I've got my emergency reserve fund. I've got my 6 to 12 months of my living expenses. It's set aside. It's not invested. It's just safe. It's my safety net. I try so hard to whittle down any high interest debt, credit card debt, an expensive auto loan. Get rid of it. And the third is the gateway to begin investing is to open a retirement account, an IRA, a Roth IRA, use your workplace plan, a 401k, a 403b, and get methodical about that investing. One of the reasons why 401ks work so well is that they automatically pull your money out of your paycheck. So a funny thing happened on Friday. A lot of people got paid, and 10% of their money went into the stock market on Friday, a terrible day for markets. If you had gotten that money and then had to make the proactive decision, I'm going to now invest, you would have panicked. There would have been no way you would do that. So automate as much as you can. Be clear that the longer your time horizon, the more risk you could take. And you don't have to be a hero. You don't have to have all of your money make tons of money. If you are uncomfortable with risk, the antidote to that is to save more.
My EP Sandra is going to kill me, but I want to follow up on that. So emergency reserve, 6 to 12 months, high interest credit card debt. Is it in that order? Because somebody did ask me the other day, should I be trying to pay off my debt right now, or should I be just focusing on building up those safety reserves right now?
I have to be honest. When I used to be a financial planner, I'm a CFP, and I did that for a while. And when we would always say, pay down your high interest debt first. Do that, do that, do that. But then I went through the pandemic. And then I realized people really do need a safety net. So the answer is, which is more important? I say yes, do both. So if you have $10, $5 goes into emergency reserve, $5 goes to pay down debt.
Okay, thank you both.